Guys, welcome to the first video. So day trading, it's been incredibly hot over the last few weeks. September was just boring. There was not a lot happening. We had a few weeks where just, there wasn't very many gappers, nothing was really breaking down. It was just a case of, it was not a lot was happening. The large cap market was pretty volatile for the period, but it was a bit of a slow period. But considering the year we've had this year, it's to be expected. You have to have that quiet period. But over the last couple of weeks, it's been insane. Absolutely insane. Today, VVPR, PBSI, Age yesterday. We've had some incredible, incredible moves. What I wanted to do, guys, is I wanted to share with you some insight and knowledge about how stocks trade and what was happening in the background of how these stocks were playing out and why everybody was interested in those, to give you a little bit more knowledge and to become a more profitable day trader. Even with the knowledge, it isn't that alone that's going to get you to become profitable. You need to master your own emotions. You need to be disciplined and stick to the plan. But hopefully, guys, with the right knowledge, the right guidance, we can speed your journey up. I learned everything about day trading from YouTube, looking at the charts people put on YouTube, looking at the charts people put on Twitter, analysing what they do day to day, and then seeing the patterns for yourself. But it's not easy. It's incredibly difficult. In fact, I would recommend anybody who's new to day trading, don't start. Paper trade, pay for mentorship. You've got to pay for mentorship. You will lose money. The cost for mentorship will never, ever, ever be as expensive as the cost of losing money in the market, because that's what happens. Everybody loses money. Today, there was two very, very good players. Very good players. VVPR for the long, SNMP for the short. I want to take you guys through both of them, okay? Let's get into it. So you've got VVPR, the biggest stock of today. The reason it's the biggest stock is because it broke all-time highs. Broke all-time highs. It had a news catalyst. That news catalyst was electric vehicles. They've bought a company in 51% share in a company with electric vehicles. That is what's key. You've got a fundamental catalyst and you also have a break of all-time highs. There's two things that make a stock incredibly, incredibly bullish, okay? 52-week highs, a lot of short traders will avoid those. All-time highs, you're just asking for trouble. Never short a stock at all-time highs. It's just silly because there's nothing to risk against. The high of the day will be broken multiple times usually. You don't know how many times, don't bother. What you need to know is if you want to short a stock, you need to be shorting a stock with resistance above. You need bag holders when the stock hits a price level. Anybody who bought at that time because they couldn't sell the same day because they're under PDT, they're going to sell at break even or for a little loss. When you've been holding a stock and it's went down 50-60%, when that goes back to where you bought it, the first thing someone's going to do is sell. The first thing they're going to do is sell. That's how we have an edge. But with VVPR, all-time highs, okay? This is what I want you to see, guys, okay? Look at the chart. Look at, it's like an intraday chart. It's popped up, squeezed, putting a pivot high around about $15, and it's faded off. Tried again, failed, faded off. What it's done is it's popped up again, faded off. But it keeps putting in higher lows. It looks an incredibly good intraday chart. If I could see this chart and it was above VWAP, if VWAP was hanging around here, guys, I would be in this long all day, every day. It's a perfect daily breakout level. Even intraday, it's perfect, right? So look at the chart. You can see now the all-time highs was here. Okay, so what we know is when a stock opens above all-time highs, supports all-time highs, that's why you think it shouldn't go any lower. But the stock's bullish. The stock is always, always, always going to go higher. You're going to have some profit taken as people try to get out of their positions from previous. So anyone that's been swing trading, they're going to take profits. They hold a small piece for the bigger move. That's what happened. You can see we broke all-time highs pre-market, we pulled back, started to fade back down. As soon as you drop below VWAP, as soon as we come next to that all-time high, the buyer stepped in and it just ripped up. It ripped up. put in an initial new high in the morning, pulls back, rips back up again. Now that's the start of it, guys. Let's think about it. You've got that first initial morning move, the parabolic move in the morning at the open. That's where you've got buyers and sellers. It's a fight, short and long. But the longs won, the bulls won, okay? That's the first part of this trade. But stocks don't just keep going up, okay? And I want to explain something to you. And for a lot of day traders, you're not going to understand and see this because for most day traders, you don't have access to shares to borrow. So what happened in the morning is we had that pre-market high. We put a line here, pre-market high, okay? In the morning, it bounced off that, fades, pulls back and goes up again. But what was key, I think, to this trade today was the cost to borrow shares, okay? And you borrow to short a stock, you borrow shares from somebody that already has shares. You borrow the shares and hope to buy them back at a lower price than you've borrowed them from that person at that time, okay? And the price fluctuated a lot today, a lot, right? And what I thought was key is you keep tracking it, the price, okay? When it's expensive, it's because the stock's at a really good price for the short, okay? The higher the price, the more likely it is to keep going down. But what I found is, okay, guys, you keep checking that price, it goes from 40 cents per 100 shares to 11 cents per 100 shares to 8 cents per 100 shares, okay? And that's what I've seen. We had this break below VWAP, first kiss on VWAP, failed, fades lower, can't break lower day, and then we try for the second time, fail to break below, but also above $15 all-time highs. So you've got to look at that from resistance, but not all day traders are as clued up as seasoned, experienced day traders, okay? We had that $15 level, that was resistance in the past, and now is support, it's acting as support, okay? Now, if this stock was going to continue lower, and it was going to fade all day, they wouldn't have the price continuing to step down. It wouldn't go to 40 cents, 11 cents to 8 cents. What happened is it went down and it went from that sort of unknown area of what's going to happen to this looks like it's going to break down, and the price to borrowers decreased. And I thought to myself, that doesn't make sense. The price that this is at now, the way the stock's behaving is it's came down here. All-time highs, that blue level, as we can see, was previous all-time highs. It's hovering around here. And the price to borrow shares is getting lower. When it's 40 cents up here, when it's very likely to go down, the price is higher. What's happening here is they're enticing in shorts. Those people, okay, what's happening here is you've got those, every time it's slamming down and those wicks are getting bought up, somebody's building a position, someone's buying shares as it goes down. It isn't just shorts covering, okay? Buying it and buying it and buying it, and then when they have the shares, you can sell them back and you can get more money for your shares, sell them back to the market, borrow those shares out and hold it. And as we can see now, those wicks kept getting bought up and it started to curl and it just went parabolic and ripped up. And that's what's key, guys. Look at the price of the shares. Does the price of the share align to the price action of the stock? And that's what's key. Look, you've got, when it breaks a lower day, it should break down, but the price of borrows shouldn't go down, because anybody who's a really good day trader, they want more shares. You've got 5,000 shares, the price goes down, you want 10,000 shares. But what we can see from this is it just hovered around all-time highs and ripped up. It didn't give a great opportunity for an entry. This was your lower high, that's your lower high, it just ripped up. Did it go up? Yes. Did it go up by a lot? Yes. Would I take the trade? Probably not. Because as fast as it can go up, they can take the bids away and it can just slam back down. It could have popped, failed, rejected and slammed back down. And all that was is if that happens, it's someone exiting the position. They're in too big. It hasn't done what they were hoping to do and now they want to get out. And it happens time and time again, guys. If you've got access to Trade Zero, any of those brokers that can borrow your shares to short, check the price. Does the price of the borrowers align to the price action and the plays that you can see? When that stock breaks below VWAP, first attempt, fail. Second attempt, fail and flush back down, breaking lower day. and then it just hovers around all-time highs. It didn't feel right. It didn't feel right at all. I wasn't interested in the short, and I think if you're going to look for the short play, this is what I think is key to all short plays. This if this was over, it would have went up, pulled back, went up, failed, and slammed it back down. But that it slowly went down. It just sort of popped. It was up and down, and if you're watching the price action, it wasn't a very clean breakdown. It didn't tell me the move was over. We're going to look further on now. You can see it's ripped up. This is what you want to look for, guys, when the move's over. That there, slowly pulling back. It wasn't really... none of this, I would give that base setup at the best, okay? But what we've got is it rips up as soon as higher day breaks. There isn't a clean entry here. I think there isn't a clean entry at all. You've got a bit of a pullback here on that bounce, but it's not for me personally. No, I don't think there's a clean entry there, and I think you're chasing it, and as fast as they go up, they can come back down, and you can think you're in control of your risk, but you aren't. If you want to enter here, your risk is down below those two higher lows. That's the truth. VWAP at the higher lows, where you think you want to get out versus where you can get out, is different. The market makers, the institutions, they decide when people can get out, not you. You stop $10, it can go down to $9 before you can get out. That's the way it works. So it goes up, it's parabolic, and this is what you're looking at now. We go along, we try, and it never puts in that death candle. The death candle, the I am over, nobody wants to buy me, and it's done. Okay, it's sort of, those wicks are getting bored up on this pullback here, and it goes back down, does the retest. This is an opportunity there to take a trade, but it's a scalp trade. It's a entering short as support with a tight risk at the lower high up here, but it's not really something that you want to be doing a lot of. With expensive borrowers, this is how you want to be getting the most out of them, but it's still, it never broke below VWAP. It sort of hovers around, okay? What I talked about earlier, guys, you want to be looking for those stocks that put in a death candle, those that go, I'm exhausted, I've had enough, everybody wants to get out, and it slams down, it's over. When this happens right here at that level, the stock's not going back up. Anybody can say now this is over. None of this beforehand shows us that it's over. That's not a sell-off, that's not a death candle. That is just selling, breaking support after support after support. It just doesn't care about it. It just keeps going and going and going. When you see that action, the trade is over. I want to show you another trade. The only one that I think was worthwhile taking today was SNMP. They didn't have a catalyst other than saying they wanted to remain compliant. They went up above $1 and then came back down. Okay, this is a good example. If you see, pre-market, it grinds up, slams, sells off. Look at this, guys. Goes up, halts, and slams back down. This is a clear example of where it trades over. It breaks below VWAP, it bounces, it can't regain, and then you have the perfect trade. Confirmation is that selling there. It had no way of going higher. This area on the daily, if you look below on this chart now, all of these are bag holders. Everybody who held this stock wants to get out when it comes anywhere near there. It wasn't going that high because it knew it was going to get slammed back down. It went up and slammed. There's two types of trade you can take. The guess that it's going to continue. It's not going to continue any higher and slam back down. The safe trade, it slams back down. You get in on the fade back down. The break of VWAP, the bounce, the failure. This is your entry. The break of $1.15. Holding for as long as you can. First take profit. Of course, it's going to be at that dollar level. It faded all day. It faded all day. It went all the way down to the low of day, 76 cents. It's nearly $1 per share on a $1.60 maximum high stock. They're the types of plays that you want to take. And the reason why it works more than it doesn't, and you can say to yourself, if I enter up here, I know none of this area is going to break first time round. It's going to pop and fail. The play that you should be taking is waiting for that. It goes up, pops, fails back down, plenty of selling. The second attempt it fails again. That works 99.9999% of the time. They're the type of trades that you want to be taking, guys. No resistance above. Look on the daily. If there's bag holders and consolidation, higher lows, you're not going to break through that. You've got $2.50 worth, $1.50, sorry, $2 worth of bag holders to break through. You're not going to get through that. Don't even think about taking this trade long. It's not going to work. It might work 1 out of 100 times, but 99 times it will not work. Don't take that trade. This one, above all-time highs, just blue skies above. It's going to work every single time. That's how you make money, guys. Be consistent. Pick A+ setups. There's no point picking and choosing, trying to scalp. You won't be profitable. If you're not profitable now and you're thinking you're a scalper, you're not taking the right trades. A scalper is somebody who takes a trade for a short period of time, bigger size. They look for 10, 15 cents, 5 cents in a few seconds, but they're entering at very, very consistent times. They know that it works more than 70% of the time when you enter there. That's what you're looking for, guys. Be consistent. Focus on those A+ setups. The less trades you make, the more accurate you will be and the more profitable you will be. That's it, guys. First video. Hope you enjoyed it. Look forward to the next one. Also, if you enjoyed today's video, smash the like button, hit subscribe. Catch you guys in the next video.